So let us continue. Let us continue with topic of actually topic 3, lesson 3 for employment income. So topic 3, employment income, and we shall do a question because we did all the theory part. So let us do a theory question, and we shall start with the question for. The question is for which sitting? This is April 2024. April 2024. Question number 3C. April 2024. Question number 3C. April 2024. Question number 3C for taxation. So we move on. So inasema John Musyoka is employed by as a finance manager by Safari Limited Estate. He reported the following details of his income and his wife for the year ended at 1 December 2023. He was entitled for salary of 400,000 with a pay of 400,000, which is deducted. He was also entitled for annual bonus of 120,000 during the year. The bonus for the year 2023 was paid, was however paid until February 2024. So that bonus was paid in 2024, but it was supposed to be for 2023. The employer provided him with a motor vehicle, 2600cc, and the cost was 0.2 in the year 2021. The vehicle was valued at 2.5 at the beginning of the year. So we are dealing with the cost, but not the value at the beginning. So the cost, which is 0.2. His annual mortgage payment of 820, inclusive of interest of 180, was settled by the employer. That is a benefit. The loan obtained from Elite for 1 January to purchase a own residential house. So this person akona nyumba yake. So he is not provided a home with the employer. Then there was a deduction. So subscription to golf club. That one is the subscription kama ingekuwa ni subscription to a professional body ingekuwa allowable deduction. So that one we did not consider. Contribution to registered scheme, we shall consider that one later as a allowable deduction. He received a gross dividend of 80,000 from his shares, where the withholding tax was paid by the company. So the withholding tax from this dividend is benefit, which we shall include, and then that income is final tax, so we shall not include it. His wife was also employed by Bright Farmers Cooperative as a general manager. Basic salary is 160,000 per month. She is housed within the cooperative society farm, where she contributes 5% of her rent as basic rent, basic salary as rent. She received free produce of worth to 24,000 during the year. Then she has other income. So we have income from the infrastructure bond. That one is not taxable. It is from Wema Development Bank. And then you have the gross farming income. Then they have told us to ignore the affordable housing levy. So required to compute the taxable income for James Musyoka and his wife. Determine the tax payable, if any, by that one. That one is fine. So tutasema John Musyoka. So we say John Musyoka. Musyoka. Musyoka inaandikwaje? Musyoka. Computation of what I call it, computation of taxable income. Taxable income. Period ni for the year 2023. For the year 2023. My pen is not visible. I think I need to add ink. Let me add ink. So before I continue, I want to show you something. So in case you see this question, you see something like this: basic salary then akuandikia into bracket net pay. Then you use add the two. When you see basic salary, then wakuambie pay deduction. What you do, you just take the basic salary alone. You just take the basic salary peke yake. Then basic salary, then to bracket pay, you just take the basic salary. So you need to know that one. So you need to know that one. Now in this case, if we go back to John Musyoka, ametuambia we have a basic salary of how much? 400,000 per month, but remember ametuambikia into bracket 120,000. So into bracket 120,000 deducted. So pale ukiangalia 20,000 deduction ni hii ya pili. Ni hii. So kumaanisha we take only the basic salary. So tunachukua the basic salary alone, we ignore 120,000. So we say basic salary, which is 400,000 times 12. So times 12, so you multiply. So 400,000 times 12, which is 4.8. Then we add benefits. We add all the benefits that this person gets. We add all the benefits. We go to information number 2. He was entitled with an annual bonus of 120,000 during the year. That bonus was paid. In the however, the bonus for the year 2023 was however not paid until February 2024. So the amount was received in 2024. No, it was a benefit for that year. Bonus 120,000. Now, however, this bonus was not received. Now it was received in the next year. So what do? This person, we shall not tax this bonus this year. At the end of that year, it will be taxed in the other coming year, because it was not during that year. And the employer was providing with a motor vehicle benefit. So we have also motor vehicle benefit. So we compare the CC of 2600. So CC unaenda pale kwa table yetu pale juu. You go back to your table hapo juu. Unaenda kwa motor vehicle, unaangalia 26cc iko under which category? It is between 2001 to 3000. Per year ni 103,200. So per year ni 103,200. You compare it with the cost. We call it cost. Cost of the vehicle, which is 24% per year of the cost. So 24% of the cost. So what was the cost of the vehicle? So the vehicle costed 3.2. So 3.2. So hii itakuwa ngapi? So we do it. So hii itakuja ngapi? So ni 0.24 times 3.2, which is 768,000. We pick the higher, 768,000. Then the higher of, remember we said the higher is taxable or is subject to tax. So between the two, the highest between 103,200 and that one, the higher is 768. That one is correct. Tukitoka hapo, information number 4. His annual mortgage of 20 inclusive of interest was settled by the company, by the employer. That's a benefit also. Mortgage payment. Mortgage inaandikwaje? Mortgage payment. All the amount paid by the employer is a benefit. So remember we said what the employer pays on behalf of the employee is a benefit. So all this amount that he was supposed to pay. So as the employer, as the employee, he was supposed to pay, but the employer paid on his behalf. So that one becomes a benefit, which shall be taxed. Aya. Remember this mortgage was obtained to obtain a house. So kumaanisha this person yeye ako kwa nyumba yake kivyake, so we shall not consider house benefit in that case. Aya. Number 5, we have a deduction. We shall consider deduction later. We ignore that one. Number 6, he received a gross dividend. We shall consider it later. 7 ni kutoka 7 kwenda mpaka 11, that's about the wife. So we add this one. Memaliza. Total employment income. Total employment income. So we add the total employment income. So itakuwa ni 48,00123 plus 768,000 plus 820,000 plus 820,000 tunapata 88,000. 88,000. So we have any other thing? Now he received a gross dividend of 80,000 from scheme where the withholding tax is paid by the company. So kuna kitu tumesahau hapa. One thing, before we add this one, kuna withholding tax paid by the withholding tax is a benefit because he was supposed to pay the withholding tax, but here hajalipa, the employer paid for him. So withholding tax is account 5% of the total amount. So 5%. So withholding tax is 5% of dividend from the real estate. Ukumbuke that one, the tax is final. The withholding tax is final, but remember alilipiwa na kampuni, so which is 4,000. So we get now the total employment income. Total employment income. So itakuwa ni 48,00123 plus 768,000 plus 820,000 plus 4,000, which is 63,92,000. Tukishafika hapo, now we can consider you can less allowable expense because we don't have anything yet. Allowable deduction. And the only allowable deduction nilikuwa nimeona hapo ni contribution to register scheme. Contribution to pension contribution scheme. Contribution scheme. Now we consider 2 items. Set limit, which is to 40,000 with the actual amount paid. Actual amount paid. Now, if we go back, we had the amount paid. So contribution to register scheme was 180,000. So 180,000. You pick the lower. So hapa you pick lower. Also we pick 180,000. So hiyo ni ya kwanza. Tukimaliza hapo, we need to consider other items. The other item that we need to consider actually tujamaliza na 30%. 30% of just a moment. So we have 30% of the total employment income, because we don't have the house benefit. We are supposed to include the house benefit, but because we don't have the house benefit, then we are going to include 63,92,000. So let us see. So 0.3 times 63,92,000, which is 19,17,600. 600. So you pick the lower. The lower still is 180,000. So the lower still 180,000. The still 180,000. Still it is 180,000. Another thing we can consider here is, what else should we consider? So I'm saying something to do with mortgage. Mortgage is also a deduction. Now for mortgage, we shall start with mortgage interest actually. Mortgage interest. Mortgage interest, we shall consider that one as a deduction. So actual amount paid. So actual amount paid in ngapi? It is 180,000. 180, let me confirm. Mortgage, let me look it. Yes, the interest in the here, suppose the mortgage interest is a allowable reduction, 180,000. Then we compare it with the actual. We compare it with the set limit. So we compare it with the set limit per year. Set limit per year is 300,000. So set limit, set limit 300,000. You pick the lower. The lower is 180,000. So you pick the lower. Then after that one, you can get the total taxable employment income. Total taxable employment income. Employment income. So we add. So it equals 6392,000 plus 180,000 plus sorry minus 180,000 minus 180,000, which is 32,000. Now we can add other income. Add other income. So we add other income. So we add other income. Let me see the income that we have for this person, not the wife. So other income, alikuwa na which income? Ile kulikuwa na huko juu tulikuwa tumesema gross dividend from real estate. The withholding tax is final, so you have to add. Did we have any other income? Hakukuwa na any other income. Information number 6. Ako tu na dividend income of 80,000, which the final tax is, the withholding tax is final. So that one we ignore. We cannot tax it further. So hiyo inabaki hivyo. So tunaweza sema gross dividend from Safari Estate. Gross dividend from Safari Estate. Tuambia hapo ni final dividend. Final dividend. So it cannot be taxed. It cannot be taxed. So ukishamaliza hiyo, we can do now for wife. We can do now for wife. The employment information for the wife. Then I think we should be So let us do for wife. Janet Musioka. So we say Janet. I hope inatoshea hapa. So hii tunafanya, so when you add this inakuwa 32,000. This is the taxable income. Taxable income. Okay, calculate total. Total taxable income. So that is the tax that is supposed, that will be subjected to taxation. That will be subjected to taxation. So tukishafanya hiyo, let us do for Janet Musioka. Janet Musioka. So let us see if itatoshea hapa. Let me use a different pen so that you see. So Janet Musioka, combination of taxable income. So we say Now tuende kwa wife Janet Musyoka. Computation of taxable income. Computation of taxable income. For the year. For the year 2023. So remember, according to KRA, the information of the wife is treated separately on the information of the husband. So the husband is not responsible for payment of tax for the wife. Unlike Kitambo, the husband was the one who was paying tax. So in this case, it is separate. So tuanze na salary. So salary ni 160,000 per month. So basic salary 160,000 times 12. So 160,000 times 12. So we multiply. So 160,000 times 12, 1920,000. 1920,000. Now we can add benefits. We can add some benefits. We can add some benefits. Now the first benefit, let me see. She is house, hiyo tutaangalia baadaye mambo na benefit, house benefit. Ana receive a farm produce. So she received a farm produce ya ngapi? So hiyo ni benefit in kind. So farm produce, you compare the actual. So actual ni ngapi? We can say actual ni 36,000. And then the other one is 24. You pick the higher, which is 36,000. So that is benefit in kind from the farm produce. So per year, as the commissioner set. Haya, tukimaliza hii tunaenda next. So tumesema tumeruka housing, house benefit tuangalia baadaye. Number 9, we have other incomes tutaangalia baadaye. Now we need to add the two, then we get the house benefit. So add the two. So we're going to add the two. So 1920 plus 36, which is supposed to be 1956,000. 1956,000. So total employment income. Total employment income is 1956,000. 1956,000. Then now we need to consider house benefit. So house benefit. Na ametuambia hapo that the house benefit is, where is it? 5% of the basic salary. So 5% of the basic salary, which is 1920,000. So 5% of that one ni ngapi? Let me go back. That is rent actually. That is rent. That's the nominal rent. That is the nominal rent. Before we check the nominal rent, remember the house benefits for a person working in a farm is 10%. 10% of the 10% of what? Basic salary, sivyo? Oh, sorry, 10% of the total employment income. 10% of 1956,000. Then remember to less nominal rent. So we less nominal rent. Ametuambia ni 5% of the basic salary. 5% of the basic salary, which is 4.8. Sorry, 1920. So tunaweza fanya hiyo. So 0.1 times 1956,000, which is 195,000. 195,600. Then 0.05 times 1920,000. 96,000. So 195,600 minus answer 99,600. So this one is supposed to be 99,600. 99,600. Then now we can add. So hii swali kama itakuja on the other side. Continuation. So let us add total employment income. So 1956,000 plus 99,600, which is 20,55,600. 20,55,600. Now we are supposed to add other income. So remember we are under Janet. Add other income. So you're supposed to add other income. The first income is the interest infrastructure bond. We have the infrastructure bond. The withholding tax that's exempt actually. So tunaandika tu infrastructure bond. Infrastructure bond. That one is not taxed. We have interest from bank. Also, that one is not taxed. Interest from bank is not taxed. Interest from bank, that one is also exempt. Interest from bank. Then you have the gross farm, inclusive of farm excluding what? What? A gross farming income, that one is taxable now. But hapa umetuambia something to do with so we need to add the two. So gross farming income, partiko mbili. So we shall consider the gross, both the two item, 240 na 300 na 30. 240,000 plus 30,000. Tuko tumemaliza swali hivyo. That question will be over. So 240,000 plus 30,000, which is 270,000. 270,000. Let me. What about this interest from bank? Is it final or not final? So that one we shall put it as exempt. Now we add them together now. So 20,55,600 plus 270,000. So tutapata total taxable income. Total taxable income. This one is 2,325,600. Now we can compute. Now we can confidently compute the tax payable by each. We shall use the graduated scale. So tax payable, tuanze na John Musyoka. So tax payable. So we use the graduated scale, iko hapo juu kwa swali yetu. So on first, so tunasema on first ngapi? Shillings. I think 288,500. That one is the first one. The rate is 10%. 288. Imeweka pana actually 288. Supposed to be 288,000. 288,000. 288,000. this one, it is 10%. So 10% of this one is 28,800. On the second one is on the next, now on the next tunaangalia the difference between upon juu ukienda juu we have 388,000. 388 minus 288 tutakupatia 100,000. So 100,000. Kumbuke tumepata this one tumepata through 388,000 minus 288,000. The graduated scale iko hapo juu kwa swali. Kila swali hapo juu. The first part hapo juu. Nimekuandikia hapo. Annual tax payable, which is 25%. Which is 25%. Hii ni kama kusema 25,000. Na ukumbuke sisi income yetu tuna focus ni ngapi? 6032. Remember it is 6032. Haya. Then yeah, just a moment, let me check. So the next one is that one is 6,000. So 6,000. So the difference ni ngapi? So on the next, tunapo tunasema on the next 6,000. So itakuwa ni 6,000. Itakuwa ni 6,000 minus 388,000. So nitupatie on the next. So 6,000 minus 388, which is 56, 12,000. The rate para wanatuambia ni 30%. 30%. So inakuwa ni 0.3 times answer, which is 16,836. 00. That is 1683,600. So ukiadd hizi zote ukumbuke, ukiadd hii plus hii plus hii bado haijafika hapa, so kumaanisha on the next ni the remaining. On the next itakuwa ni the total amount, which is 60,32,000 minus yenye imebaki, so to add zote, so 288,000 plus 100,000 plus 56, 12,000, which is 6,000. 6 million, sorry. So kumaanisha on the next yenye remaining ni 32,000, which is taxable at which rate? 32.5. 32.5%. So 0.325 times 32,000, which is 10,400. 10,400. We add to get the total amount, which is the tax liability. So we add them together. Tax liability. So tunasema ni 28,800 plus 25,000 plus 16,83, 600 plus 10,400, which is 17,47,800. Remember to let's pay. So pay from the question ilikuwa huko juu. Alikuwa na pay. Then also personal relief. Personal relief kwanza, before nipande huko juu niangalie. So personal relief ilikuwa ngapi? Pale juu kwa hiyo table yetu ni 28,800. 28,800. So you get the tax payable. Tax Payable. Now let me look for the payee. Okay, so this case we shall not include payee. So payee haitakuwa because it was not included here. So payee was not included here, so we shall not include it here. So that will be the final tax to be paid by Musyoka. So tunasema 1747 800 minus 28,800 28,800. So atalipa tax ya 19,000. So that's the amount of tax that Musyoka will pay. That is amount of tax that Musyoka will pay. And then you can also do for Janet, tax payable for Janet. So uni John. So you can do tax payable for Janet. So on the first, so tunasema on the first, Kenya shillings 28,800, which is 28,800, 10%. Kumbuke bado tunaangalia amount bado haijafika, so 28,800 haijafika hapa. On the next, Kenya shillings, so the difference between the two, tupatia 100,000. So get the two. So when you add the two, 288 plus 100 bado haijafika this amount. Sisi tunaendelea 25%, which anapatia 25,000. And then on the next, Kenya shillings, so itabidi tumechukua nao the total of amount tuna minus that figure. The total amount pale is kiangalia pale ni 6 million, of which 6 million it makes sense juu hajafika 6 million. So the way possible tunachukua the whole figure yenye imebaki. So just take the whole figure. So itakuwa ngapi? Hiyo ni 2055 600. Tuna minus what? Tuna minus the whole figure pale, minus 288,000 minus 100,000, which is 1667 600. 1667 600. Juu wamesema the third one, if we check the third one, just a moment. So percentage ni ngapi? Ni 30%, so inaishia hapa 30%. So unasema 1667 600 times 0.3, which is 500 to 80. 500 to 80. So you have to get the tax liability. So 28,800 plus 25,000 plus 500 to 80, which is 554,800. So you're gonna pay, so with less personal relief, which is 28,800. So tax payable, so 554,800 minus 28,800, 526 5 to 6,000. So 5 to 6,000. So that one is question number 1 of employment income. Let's go to question number 2. So we do for December 2023, question number 2B. December. So this one was for April actually. Nimetoka kufanya was for April. Or ilikuwa which sitting? Ilikuwa the sitting for this one was for April 2024. This question nimetoka kufanya was for April 2024. So we can do another one. So let us do now for December 2023. December 2023. Question number 3. Number 3B. So April 2024 was question number 3C. This one was question number 3C na tumeshafanya. So we do now for December 2023. December 2023 shall be very fast. The question is about Rosemary. So let me read. Rosemary Aswani is a resident individual who is employed as a senior financial analyst by the United Homes Ltd for the year 2022. Now, information number 1 is about monthly salary 204, and then pay was 647,200. Terminal dues received for her previous employer service not rendered amounted to 1.4. So the terminal due we shall consider in that year that was received. We have a commission of 100,000 paid to her for promoting sales house where the house was sold by the two customer. Commission, that's a benefit, we shall consider it. She attended 5 years masterclass financial analyst by her professional body, and the employer paid 100,000. That's seminar fee. Then there is a percent of 12,000. Also, that one is taxable. It's a benefit actually. She was given an offer to buy a house from home house at 20% below the market price. She accepted the offer and bought the house. Whose market price was 8 million. That's a house benefit. She shall consider it. Fixed deposit account 2.5 where she received an interest of 150,000. Then the life assurance policy where she pays 60% where the employer paid the balance. The annual premiums per year insurance is to 40,000. That one is okay. We shall consider it. We have a car 2000cc, and then the car had a cost of 2.8, and then we have a race charges of 36,000. We shall consider the 3, then we take the lower. Actually, the higher. United Homes medical cover all the employee staff. The maximum is 80,000 through the year. She trades for 20,000. So that one is discriminatory because it only covers the senior employees. That one is taxable. She paid a subscription to professional bodies amounting to 24,000. So those subscription we can call it the allowable reduction. Can call them the allowable reduction. That one is fine. You have her other income. You have the royalty, 180,000. Gross farming income. We have the part-time practice. So you are supposed to compute the taxable income for that one. Then the tax payable. So we start with the basic salary. Salary. So the basic salary is 204,000. 204,000 times 12. So 204,000 times 12. So 204. So we shall not include pay. 24, 48, 48,000. Now we can add the benefits. So we add the benefits. So we add the benefits. The first benefit natuambia hapo. So pay deducted. So mtuambia pay deducted. So we add the basic salary alone. So ni kama tu hii. pay deduction. So pay deduction. So we are the basic salary alone. Now, terminal dues received from a previous employee amount to 1.4. So that one I may receive that year. Nasema terminal dues. The year of that I may receive in that year. So that terminal dues is an income which is taxable. A commission of 100,000 was paid, so commission paid to him. So I receive a commission. Commission received. I repo 100,000 kwa sababu ya kuuza nyumba two houses. That commission is taxable. She attended a 5 master class where the employer paid 100,000. So seminar fee, that's a benefit kwake. Seminar fees ni benefit kwake kwa sababu employer ndio alimlipia. Kama ni yeye alijilipia haingekuwa hapa, haungeweka. But because it's a benefit the employer paid for her, then that one is taxable. Then subsistence allowance also alikuwa anapewa kila siku 12,000 subsistence allowance ya 12,000 times 5. So alikuwa huko for how many days? For 5 days, so that is 60,000. So I received 60,000. She was given 6,000. That's a benefit because I repair CRG. She was offered a house. So that house benefit, we ignore house benefit for now. Tatumia baadaye. She has a fixed deposit account of 2.5 where she receives an interest of 150. That one shall consider later. She has a life policy assurance where she pays 60% of the premium. So insurance policy analipa. So insurance policy. She has a insurance policy where she pays 60% of the premium and the employer pays the balance. So the employer analipa 40. So what the employer pays ndio tunaweka hapa. Yeye analipa, yeye akilipa si benefit lakini yeye amelipiwa ni benefit. So 40% off to 40,000. To 40,000. That is a benefit. So tutasema 0.4 times to 40,000. 96,000. 96,000. Tukitoka hapo nimepotea. Number 8. Car benefit. We need to consider the car benefit. So tunaanza na CC. Car benefit. So the CC ni ngapi? So the CC is 2000 cc. 2000 cc. So unaenda kwa table yetu pale juu. Let's go to our table. You see the CC ni ngapi? So mimi nikienda pale naona 2000 86,400. 86,400. Then we consider the cost, which is 24%. That is the cost of the vehicle. The vehicle cost ni ngapi? The vehicle cost. Acha nirudi hapo. 2.8. 2.8. 2.8, which is 2 million. So inakuwa ni ngapi? The vehicle, the CC. Inafaa kuwa ngapi the CC? Inafaa kuwa 2%. In our previous let me check first, just a moment. Your previous video. So it is fine, it is 24%. 24%. But ukiangalia hapo kuna date from 1st September. So tutatumia 2% so that remember per year ni 24%. Per year ni 24%. Kupandisha per month divided by 12, which is 2%. So 2% times 2.8. But now remember it was used from 1st September. So you need to consider that one. It was used for from 1st September. So September, October, November, December. So it was used for only 4 months, 4/12. So it was only used for that month. So I think tukishafanya hivyo tutakuwa tumepata the figure. So itakuwa 0.02 times 2800 00123. Actually times 4. Actually inafaa ikuwe times 4 kwa sababu tumeweka hapa 2%. So inafaa kuwa times 4, which is 2 to 4. 2 to 4,000. Then you consider the lease payment. Lease payment walikuwa wanalipa 36,000 for 4 months. So that's 6,000 for 4 months. So that's 6,000 for ultimate guide for only 4 months. 144,000. So pick the higher. So the higher hapa ni 2 to 4,000. 2 to 4,000. Number 9, United Homes medical cover. This is medical cover in this discriminatory. So taxable. Medical cover. Unaandika discriminatory. Then inakuwa tax. So how much? Medical cover ilikuwa ngapi? The medical cover was for 20,000. That is what she utilized. Aya, tukishamaliza hiyo tumeenda fika kwa income. So before tuende kwa incomes, tulikuwa something to do with what? There was something to do with house benefit. House benefit. So there was something to do with house benefit. So let me see the house benefit. Ilikuwa information namba ngapi? House benefit. So nikienda huko juu, house benefit ilikuwa information number 5. She was given an offer to buy a house from Ulinzi Homes at 20% below the market price. So 20% below the market price. Kumaanisha the market price is 100%. So yake ilikuwa ni 80%. So badala alipe 100%, alipa 80%. She accepted an offer in both the house whose market price was 80,000. Whose market price was not 8,000. Whose market price was 8 million. So 80 million. So kuna benefit alipata hapo. So the market price is 100%. Yeye amepewa discount ya 20% na employee. So yeye analipa 80%. So Rosemary analipa 80%. Then the rest inalipwa na employer. So si analipa ni employer. So that 20% kwake ni benefit. So tunakuja tunasema hapa house benefit. So we say house benefit 20% of the 8 million. Employer amemlipia. But kama yeye angejilipia ingekuwa hapo. So 0.2 times 8 million. So this one is 1.6. It's taxable. So I think tukishafika hapo, we can add everything to get the total employment income. We can get everything to get the total employment income. Then we less allowable deduction. So total employment income. Total employment income. So 2448,000 plus 14,00123 plus 100,000 plus 100,000 plus 60,000 plus 96,000 plus 2 to 4,000 plus 420,000 16,00123. So this one is 6,448,000. Now there's no any other thing, so we can less allowable deduction. Less allowable deduction. Less the allowable deduction. Now in this case, the allowable deduction is subscription to professional body. Subscription to professional body. So how much was that? Subscription to professional body ilikuwa ngapi? 24,000. So less inakuja ngapi? So minus 24,000. 6224. 24,000. Yeah. Tumemaliza hivyo. So we consider other incomes. Other incomes. Other incomes. The first income is royalties. This one is tax. Final tax. It is not final tax. Remember the rate is 5%. So income tax is 80%. Wametoa withholding tax. So we need to get the gross amount. So 180,000 represent 95%. What about 100%? Inakuja ngapi? So 180,000 times 100 divided by 95. Hiyo inatupia ngapi? 189,473. 189,473.68. So tumemaliza hivyo. So we need the gross. So next we have interest from what? We have interest from pale juu. Interest from deposit, fixed deposit account. That is final. Withholding tax is final. So interest from fixed deposit account. Withholding tax is final. So withholding tax is final. So unaweka dash. Then you have the gross farming, hiyo unaweka. Hiyo that one is taxable. Gross farming income. Gross farming income is taxable. So ukiangalia hapa. So for 50 plus 80. Mimi niko kwa gunia gani? For 50,000 times 80 ni ngapi? For 50,000 times 80. Iko wapi hiyo? So you say 530,000. Yeah. Then you have the part-time content creator, hiyo inataxiwa. Pia ni content creator. Yeah, content creator. Content creator is withholding tax is final. So content creator withholding tax is final. So unaweka dash. So to get the total taxable income, total taxable income. So we are supposed to add 6224 plus 189,473.68 plus 530,000. Itakuwa ni 6,943,473.68. So ukishafika hapo, we can compute the tax payable. Now we can compute the tax payable. Tax payable. Tax payable. Tax payable. So So tunaenda kwa our graduated scale. On the first 288,000. On first Kenya shillings 288,000 in 10%. Repatia 28,800. Then on the next 100,000. Percent ni ngapi? 25%. Repatia 25,000. Then on the next, so on the next, so itakuwa ni 56,12,000. 56,12,000. Remember, it's the difference between. Remember, it's the difference between 6,000 minus 388. 6,000 minus 388,000. That is, so itakuwa 0.3 times 56,12,000. So it's 16,83,600. Then on the next, now the remaining sababu because so ndio the last part actually. So tunachukua 69,43 473.68 tuna minus sasa ile 288,000 na minus 100,000 tuna minus 56,12,000. So tunapatia 943 476.68 30.5 32.5 sorry 32 point, which is the last part, so times 0.325, which is 306 629.92. Oh yeah, so we're gonna get the total tax liability. So 28,800 and 5,000 1683 600 plus 306 629.92, which is 2,044,029.92. Let's pay, but pay was not included here, so dash, then you can less personal relief. Personal relief is 28,800. So minus 28,800. 2,015,229.92. That will become the total tax payable. That is the total tax payable, the tax that is supposed to be paid. Okay, before we say the total tax payable, we had some items before we say the tax payable. We had withholding tax that was paid, so we less withholding tax that was paid. The first withholding tax that was paid, actually it is the royalties. Tuliweka hapa, this one yenye tu tuliweka hiyo peke yake, which was 5% of the total amount, which was 500,000, sivyo? 5% of, sorry, 5% of, sorry, 5% of the 5% of the gross amount. Gross amount is 189,473.68. That is the 0.05 times 168. Sorry, 189,473.68, which is 9,473.684. Then remember also to less two sides of insurance policy, and hii hapa insurance iliko wapi? This one ya to 40,000. So the relief yake ni 1.5% of 40,000. 1.5%, so that's a relief. So 1.5% times 40,000, 3,600. So unapata the total tax payable. Total tax payable. So kwa withholding tax unaangalia yenye uliweka. So kama hii it has withholding tax tuliweka, kama hii hauwezi weka kwa sababu the withholding tax was final. So unaweza sema so 2044 ni tumesema 1.5%. 1.5 over 100 times 240,000 ni 1.5 kama inakwanga what? Inakwanga ngapi? Someone to tell us. Inakwanga ngapi? The insurance. Actually, it's supposed to be 15%. Supposed to be 15%. You mean 1.5? Supposed to be 15%. This one, not 15%. Supposed to be 36,000. 15%. So 2044. 029.92 minus 28,800 minus 9473 2684 minus 36,000. This one is 1969 756.236. So remember wakati utatumia this format, this one ya kwanza, this one